Stopping advanced threats requires knowing exactly what you're up against. Extra Hop Reveal X is the only solution that shows you not just where intruders are going, but where they've been. 90-day look-back and complete network visibility across the data center, cloud, and device edge help security teams respond 84% faster with Extra Hop Reveal X network detection and response. Explore the interactive demo at securityweekly.com/extrahop.
Welcome back to Business Security Weekly. I am your host, Matt Alderman, joined by Paul Asadorian and Jason Albuquerque. Join us on Thursday for our first technical training of the year. Register at securityweekly.com/webcast. You can also catch all of our previously recorded webcasts by visiting securityweekly.com/on-demand. Also, if you missed Security Weekly Unlocked, you can now access all the content on demand, whether you register before the live event or not, by visiting securityweekly.com/unlocked and clicking either the button to register or the button to log in. We're going to keep that up, I think, until the end of March, roughly. So if you missed any of that great content, please get out there and watch it before we pull it down. All right. I did a lot of research for this segment because I really wanted to understand the ins and the outs of this whole thing around GameStop. Yeah. And when I started researching it, I went, this is like a well-crafted hack when you think about
100%.
it. Like the research that went into it, the targeting of looking at certain data, and then rallying, just this huge community of Reddit traders to hack the hedge funds. And I thought, what a better way to round out the second segment of our Security Money show than dig into some of the details, like how did this happen? And more importantly, for some organizations, like what should I be worried about if this were my stock, right? Because how much control do you actually have of your stock in the market? I just so many parallels here that I just thought we should break into.
Yeah, the hedge funds didn't realize they signed up for a crowdsourced pen test, I guess.
Exactly right. That's exactly right. So, the whole thing starts with this concept of short selling. So, what is short selling? I think we got to start with some basics, right? Just for the audience. Short selling means that it's typically a hedge fund is borrowing a share from a broker at a price point, assuming that it's going to go down. And they hold on to it, wait for the stock to go down, then they buy it at the lower price, sell back their stock at the price they borrowed it at, and they net the difference. So let's say they borrow a stock at $10, it drops to $2, they buy it, sell it back for 10, they make $8. That's a short sell in the simplest terms.
Trading Places, starring Eddie Murphy, 1983, is a great movie to watch.
Yes,
it's pretty much.
It gets into all this.
Yeah.
It gets into a lot more, but it's a great movie. So why is that important? So there are hedge funds in the market that during COVID last year looked at certain stocks and started to put in short sells against their stock. And in the case of GameStop, the number of shorts on the stock was over the amount of stock available in the market. They were over 100% leverage on the short sell. Now, that creates some very interesting scenarios. And in GameStop's case, you had a bunch of Reddit users that were already monitoring the GameStop stock and saw that the selling of short interest was more than the available flow of shares, and they started buying shares. And what happens is when you buy the public float, a couple things happen. One, the stock price goes up. But number two, there's nowhere for the short sellers to buy from potentially, right, because they need to buy the stock at some point to close their position. So when you're over leveraged, which a lot of these hedge funds can be in over leveraged positions, it created this very interesting scenario for these Reddit users. So that's why GameStop is so interesting.
What it does to the hedge fund too, right, is that as that stock goes up, now they have to pay back what they borrowed, but they're losing money on the deal if the stock goes up. Let's say it's that $10 scenario you just talked about, right? But now it's worth 15. So now they owe 5 on every stock. Is that correct?
That is correct. Right.
But the stock was they were already in debt to begin with.
Well,
Or
when
does
they
that
were
what put
buying,
him? Does that what puts him in debt? Is when the stock price goes up?
goes up. Yeah. So
Yes,
the
that's it.
short
When the
squeeze,
Redditors drove the stock up, it put them in
It
debt.
put them in debt.
right. So what happens here in this case is they're using a Reddit subgroup called WallStreetBets. It's been an established group for a number of years, and they started noticing this situation. And so what they did is they rallied that subgroup to go out and start buying GameStop stock. And they started buying it. I found a graphic. I couldn't find it again. I mean, this was starting, like June, July of last year. They're buying the stock. They see this scenario playing out. So they're buying up the stock, and they keep buying and they keep buying. The price keeps slowly going up to the point where the squeeze starts to happen. These margin calls from the short sellers are coming due. They don't want to pay the price, or if they pay the price, they have to make up the difference, right?
Mm-hmm.
And so what you saw like last week was the beginning of the squeeze, where the hedge funds needed to cover their borrows in their margin accounts. The stock was inflated, kept going up, and now they're losing money hand over fist. I mean, like in the tens of billions of dollars. I think Melvin Capital lost something north of $20 billion last week.
Wow.
Unbelievable.
Yeah, unbelievable. So I thought it would be interesting to say, okay, so now what? Because you have this very interesting Reddit group that is determined not to sell their shares. I mean, I did join the Reddit group this weekend because as I was researching for the story, I wanted to see what kind of communication's going on, right? Because what's the end game? At some point, the hedge funds have to buy the shares to close their positions. But the stock is at a price point where if they buy it at this level, it's going to continue to cost them a lot of money to close their positions. So what's the end game? For the Reddit users, it appears they are going to buy every dip and hold their shares. Now, that Reddit group has exploded to over 8 million people.
Wow.
And tell me, I'm going to tell you, most of those people have no idea what they're doing.
They're just sheep. They're just sheep. They're pawns in the game at this point. Yeah.
Yeah.
At this point, they're pawns in the game, right? They're coming in late to the game, trying to figure out how to capitalize on this whole phenomenon. But anything you do at this level is very risky for anybody. It's still risky for the hedge funds in a big respect, right? Because if the stock price doesn't come down, the only way to close the position is to pay out the cash. I mean, people like Melvin Capital and Citadel and even Robinhood, which is one of the brokerage firms for the trading platforms, they've had to borrow billions of dollars to cover their losses.
Yeah, and they actually didn't they shut down services for a little while, at least from Robinhood?
Yeah, Robinhood did. Yeah, that's under some controversy as well.
I know.
Yeah. Saying they didn't have the capital to cover, so they had to shut down. They wouldn't trade. There is a big move right now away from some of the platforms that are limiting GameStop trades to other platforms that are more open. I think Fidelity. I can trade it on my Ally account, for example, Paul, because I still have that account open. I don't see any limits on GameStop purchases there. So there are some platforms that aren't trying to limit it, but there are some that are, because they're highly connected with these hedge funds, because these hedge funds are borrowing from these brokerage firms, right? In some of these firms. And so they're pretty tightly connected. So when one hurts, they kind of both hurt. So I think they're trying to minimize pain.
Right.
Yeah, and I always look at the and we said it earlier, when we were on a break, and the law of unintended consequences here, right? I mean, I just read an article from 4 hours ago from the Wall Street Journal, and it's basically saying that that Reddit page is seeing a ton of bot activity at this point. So how are outside forces trying to manipulate people through this medium?
Yeah,
we talked about the silver surge earlier, right?
Yep. So let's talk through a couple of the dynamics off of this, right? So if GameStop was in this situation, were there other potential stocks in the same situation? None to the extent of GameStop, by the way, because I did the research. There are some stocks out there that have a high percentage of shorts against the float of the number of shares outstanding. But they're in like the 60-70% range. They're not over 100%.
100,
GameStop
right.
was unique in being like 114, 120% over short sell, right? So there isn't really one. They talk about a number of stocks, and a couple are interesting because they're companies like BlackBerry has been in the news, right? We know BlackBerry from their Cylance acquisition, right? They're one of the supposed stocks on the short sell list. But if you go research BlackBerry stock, which I did, it's nowhere near the short sold position that GameStop is in. I mean, I think it's like 30%. It's not anywhere close to some of these other stocks. So, but to your point, Jason, if you read the Reddit, they're talking about AMC, which is roughly 70-80%. They're talking.
No, Matt, hold on.
BlackBerry.
That percentage is the percentage of shares, total shares that are on being borrowed in the short sell, correct?
Correct. Compared to float.
How did they let it go over 100% though? That's my question. How is that even a thing?
Leverage, you can. Yeah, they kept shorting the stock.
It kept borrowing and borrowing. Not enough.
Right, where there was more on the short sell list than there was actually float available in the market to cover it.
And is that because Redditors were buying it, also taking some of that stock
shrinking
off
the float?
Shrinking
Correct.
the float. I gotcha. So could they force that? Could they force that with a BlackBerry if they started buying it? No. They
yes.
Would. Yes, they
could. AMC is all the research I've done, AMC is probably the other one that is in their sights because it was at the 70 to 80% level.
AMC is the movie theater?
Movie theater.
Yes.
Yeah. Okay.
Yep.
So again, one of those businesses that took a hit from COVID and the shutdowns.
GameStop was the same thing. They were closing stores.
Exactly. So the hedge funds were coming in saying, hey, I'm going to short these stocks because I think they're going to go down. And they put themselves in these situations, right, where they were highly oversold on the short sell side. And then you've got somebody coming in to buy up that interest. So what happens, like AMC's up today. It was up earlier. I think it's still up because what you're starting to see is aspects of this start to play out potentially on the AMC side. Not exactly the same scenario, Paul. But when I monitor the Wall Street bets, and if you really pay attention to some of the original kind of core members, their end game is buy as much GameStop as they can and hold it to continue to remove shares from the float, which continues to squeeze the hedge funds.
Right.
That's their end game. I'm not sure.
Eventually, they're going to run a stock to buy.
Yes.
And then what? Then they just hold it. Does the share price start to go down?
No.
No, because of supply and demand, the share price stays the same.
But remember, the hedge funds borrowed against it. They can't close their position. They're still potentially exposed.
They're screwed,
because
basically.
They can't sell the share unless they can buy it on the open market to replace it, right? And so I think the end game, and the question is who lasts the longest in this game, is if you buy up all the float and you hold it, you put the hedge funds in a very precarious position. But that means you have to have the entire mass of this 8 million user group buy up enough of the shares. Now, at last calculation, if every Wall Street Bets user bought 5 shares of GameStop and held it, you would basically remove all the float from the market, somewhere around 42 million shares at last count. That would put the hedge funds in a position, but that means you don't have anybody not selling, right? I mean, how many people are going to cave? Are going to cave at the end of the day, and that is kind of the theme today. So, to counter the hack, the hedge funds came up with a strategy to try to get the shares back into alignment from price point. So this morning, the hedge funds implemented what's called a ladder attack or a ladder scheme. And what they're basically doing, again, this is so fascinating, is they're basically buying shares from each other at lower and lower price points on very quick frequencies to make it look like panic selling. So what they're trying to do is say, look, hey, Citadel, I'm going to buy yours for 5 cents less than this price, and then you're going to turn around and buy it 5 cents less than that from me, and they're like swapping shares
back and forth at a lower price.
At a lower price. And if you do it fast enough in the market, it looks like panic selling.
Mm-hmm.
And what they're trying to do is to get those people that might want to cave, Paul.
To panic.
Yeah,
they want them
to panic.
Mm-hmm.
Oh yeah,
to
and
sell
you see in the Reddit stream, just the folks saying hold tight, right? Don't believe what you're reading, and you can see them really pushing their users to just commit and hold firm,
right? Because they know if they hold the stock, they win. But you can't account for all these people holding the stock.
Right.
So,
but if people start dumping it, the price will go down, basically.
Exactly. Yeah. Because if you start to dump the stock, right, prices will go down. The hedge funds will start buying to cover their positions at a lower price point as much as they can to reduce their exposure to the short interest.
Right. They're not gonna make money, but they're trying to lose less money, essentially.
Correct.
Right. If I can
they're going to.
Losing 20 billion,
minimize their loss.
If I can lose a couple of billion rather than 20, that would be great.
Exactly. Yeah. So they'll do whatever they can to try to buy it at a lower price point to minimize their losses. But the reason it's interesting is this ladder attack is because they can tell based on the size of the lots that are being sold back and forth and the volume, super low volume.
Right.
I was telling Jason on the break or right before we started the show today, the volume's half of what it was on Friday, right? So there's no panic selling when Friday was volume's low. I mean, the volume on Friday was over 66 million shares changed hands. At almost market close today, it was still under 30,000, right? So there or 30 million. So there's still not the same level of trades going on. So this is going to play out over the next few days.
Even though that price is, it is artificially inflated. But you can maintain that artificial inflation as long as everyone doesn't sell.
That's exactly right.
Wow, it's amazing.
Yeah. How do you keep everybody from selling?
For someone like me who's not even close to as educated on this as you are, Matt, it just shines a light to me on how easily manipulated the stock market really is. You know what I mean? Yeah. It just, we said it before the show started. Half of these things these hedge fund companies do, I look at as, borderline. How is it legal, right? In some instances, I get that it is, and I get they're working the process and the rules as tight as they possibly can. But, the outcome of all this, is it a little bit more sunlight on all these crazy practices that these hedge funds do and how easily the market's manipulated? 6 months from now, what are we going to be talking about here?
Yeah, a couple things. One, it has definitely highlighted this concept of short selling and looking for stocks that potentially are in this similar scenario because everybody wants their try to get rich quick kind of scheme, which is why you see a lot of news articles and reports. And I put some into this segment so people can go read about some of the stuff. You're seeing like these are the top, 20 most shorted stocks, right? And I think what you'll see is some people playing around with this, seeing if they can replicate it. I think it's very dangerous for an individual investor or a group of individual investors who don't have the deep pockets of some of these hedge funds to attempt to do this. I'm not sure this can be replicated. We'll see. Okay. So that's one. Number two, it did put a very interesting light on a few things. One, this whole practice. And remember, part of the 2008 market crash,
I was going to say, it sounds
was due to short selling.
Yeah, it sounds kind of similar because it was the mortgages that were overinflated that triggered that. Yeah.
And it was the short sellers that made all the money and took the Merrill Lynch's and the Lehman Brothers down, right?
Right. Yeah, eventually someone in the mix is not going to have enough money to cover it and something's going to crash, right?
Right. But that was institutional short sellers, not individual short sellers.
Right. Yep.
So, this is a little different scenario. So one of the things we did with Dodd-Frank after the 2008 market crash was we put kind of capital requirement on the banks to make sure that they didn't overexpose themselves
Right.
to recreate that. The question now is, Jason, will we see similar things come into these hedge funds to say, look, at a certain level, you either have to have this money to cover because you can't do it on margin anymore, or to a certain percentage, or maybe there isn't an ability to short sell a stock over a certain percent. I think you could see some regulations coming into play here. And those are the things I think get interesting.
Yeah.
The one caveat, though, there's a lot of ties back to a bunch of people sitting in Washington, D.C.
Yeah, of course there is. on both sides of the aisle.
Well, yeah, and I think we're talking about before the show. I mean, you can go back and research all Congress members on from every party that have been flirting that line with insider trading, right? Trading. Nancy Pelosi buying Tesla, or her husband was the one that bought Tesla, right? There's always that game that's going to be played.
Yep.
Yeah, exactly.
And there isn't much that is bipartisan these days, but when you're pulling money out of their pockets, I'm sure they'll agree on something together.
Yeah. Right.
Yeah, and my guess is some of these politicians have some of their money in some of these hedge funds, and they probably don't like seeing these losses either. So it'll be interesting to see what kind of regulations, what kind of reviews are done. I just thought it was just a brilliant kind of set of research, a brilliant tactic for a bunch of individual investors to target a stock. And like I said, the end game for them is how long can they hold it and how high up can they drive the price to really put the pinch on the hedge funds. Yeah. It'll be interesting to see how it plays out. But it was sort of phenomenal. Just the whole phenomenon and researching the story, I'm like, it's kind of a fun cover piece.
Oh, totally. And at the end of the day, no matter what the outcome of all this becomes, that Reddit group kind of already won. They've already put the challenge out there and challenged the hedge fund companies. They're making crazy news. They're shining sunlight on all of this, short selling and trading. And, I think they've already won. Now it's just how much more do they get out of this?
Well, and is it self-regulated now that they've shined a spotlight on it?
Maybe the hedge funds won't.
Right.
Well, I know a couple of the research firms that were publishing these short sell reports have basically said, look, we're not going to publish our research anymore because we don't want to be responsible for creating another one of these.
Right. Yeah.
So people are doing it off on their own. They're trying to look at this. They're trying to find the data to say, should I buy AMC? Should I buy BlackBerry? Should I buy Nokia? Should I buy silver? Like, silver appears to me to be a distraction.
Right. Yeah.
In what's going on. When you read the Reddits and you're in that group, silver is a distraction. Silver is up today. It was up on Friday too. But I think people are trying to distract away from GameStop because I think the hedge funds want people to get distracted from GameStop.
Yes.
Yeah. And think about this as a public company for a second. Right? I mean, Elon Musk has been very vocal about short sellers because a lot of Tesla stock was in short sell last year, and he crushed them because his stock was up. But think about this for any public company. What is the risk of a similar scenario playing out in either direction for you? Right? From a leadership communication perspective for a second, if you are the CEO of GameStop right now, what do you do? Because your stock is like 100 times more than what the street believes it's currently valued at.
Yep.
How do you prepare yourself for an inevitable crash?
Right.
Yeah, right. Exactly. You can't put any faith in that as a CEO.
Right.
You can't go to your board and be like, look, I'm doing a great job. Look at our stock.
Look at this.
It's doing awesome.
Right.
Awesome.
So think about that risk, that whole new risk vector that nobody even thought about before. But now,
you don't have control of that. I mean, you don't have control of that as the company. GameStop had. Is there anything they could have done? I don't think so, right?
Not really.
No.
I mean, the only thing I guess they could have potentially done was do a stock buyback and reduce the amount of float. But again, you're not going to buy back stock that's 100 times inflated.
Right.
Exactly.
So,
Yeah, now
so
it's
what
ship
control
sales.
do you have?
Yeah.
Yeah. I think it just adds a new risk factor that I don't think people thought about. I'm curious how it plays in the financials. I think there will be some regulation, but as just a CEO or a board in a public company, I mean, how do you mitigate against this? I don't know if you can.
I don't think so.
Yeah. Usually it's regulation that comes in. Jordan Belfort, right? Wolf of Wall Street, I believe, triggered further regulations to prevent, which that was something completely different, right? That wasn't.
It was.
It was different.
It was. I mean, some people would say that what the Reddit users are doing is market manipulation, but I'd say the hedge funds are doing the same thing with short selling.
Yeah.
So
100%.
Yeah.
if it's legal for one,
I mean, it's. I look at it this way. It's a reaction to something that was already happening, right? So these Reddit users reacted to the power that these hedge fund companies have, and they wanted to challenge them.
Yep. Yeah. And the only end game is to buy and hold what they call diamond hands.
Diamond hands.
And watch it launch to the moon.
Yeah, because the Reddit users they're not cashing in on it yet. Or can they?
They can. Anybody can. I think you've got a lot of people that have purchased into the stock and have sold when it goes up. They're playing they're doing the dip and the rise, right? But I think the hardcore Wall Street Bets Reddit users have bought and they're holding.
Interesting.
We'll see. Next quarter we'll have to do a follow-up.
We'll have to revisit this.
Yeah, I definitely have to revisit this.
Yeah. Gentlemen, thank you. It was a pleasure. This was a fun segment. A lot of research went into this one. So I've got some great articles posted up there for anybody who wants to learn more about the hedge funds, short selling, all the other things. Thank you, everyone, for watching, listening, and we'll see you next week on Business Security Weekly.